Okay, the question that we left in between, question number 6, page number 5 that is. Mr. Vikas, age 60 years, resident is deriving the following incomes in India, country A and country B. Compute the total income and tax liability assuming that India does not have a DTAA with the foreign countries. No DTAA. So listen, resident and no DTAA. That means foreign income, foreign tax, no DTAA and resident. Clear case of unilateral relief. So question required part is total income and tax. Your relief again will become your working note like question number 2. What are the things that have been given to you? As far as your Indian income is concerned, income from business in India 9,20,000. Interest income on saving account 64,000. From country A where tax rate is 12%, 72,000 agriculture income, 8 lakh rupees royalty gross and expense for that 8 lakh 70,000. Country B tax rate 23%, dividend income of 225, rent received 330 and municipal tax is paid 10,000. That's it, question is over. Now don't look at my handsome face, wow, and don't read the answer, otherwise I will kill you. This much is the data given in the question, and question is asking you to do total income and tax liability. With how much we have read in the question, we have got little hint, little idea that the question is going to test you on unilateral relief, for which you need to find out total income, total tax, average rate of tax. Compare with the foreign rate 1223, whichever is lower we will choose individually and we will calculate our relief. We have some idea in our brain, but the problem is when so many things are given together, agriculture income, royalty income, dividend income, rental income, what to do, how to start, things get difficult for students, especially because they have never practiced. They only read question and answer and then they think they have achieved anything in life. Real achievement is when you are actually able to solve that sum with pen and paper. And today I am giving you a very important piece of advice. The moment you get the question paper, you read the question, the moment your question gets over, your pen should start moving. A CA student is generally found wasting a lot of time between finishing the question and starting the answer. You have to stop wasting that time slowly and gradually. Slowly, I am not saying it will happen in one day, but slowly and gradually start developing yourself in such a way that your answer starts the moment you finish the question, and for which the best trick is go to the question and not just tax every practical subject, search for a line called the required part. Required part means you do this, we will give you marks. Do you want marks? Obviously yes. How will you get marks? Do this, we give you marks. What is the required part of the question? Total income and tax. If you do these two things, can I say you will get your marks? And out of these two, what will happen first? We know that also. So we will first calculate net taxable total income. And because so many incomes are involved, till now we have not seen any question where so many incomes are there. Only Indian income, foreign income was there. The best idea is one thing at a time. If you think about everything together, you will not be able to do justice to anything. Best idea is go in order of heads of income. Total income means 5 heads. Total income means 5 heads. So search for salary. Write only if you have it. If you don't have it, ignore. House, property, business, profession, capital gain, other sources, question over. Search for one thing at a time and write only if it is there. By the time you finish 5 heads, that means you have finished all incomes. And this is the best trick to do big questions on total income and tax. One by one, the various heads of income. This assessee is an individual, and because the assessee is an individual, is income from salary possible? Yes. But does the assessee have it? No. So don't write it. Go further. Is there any income from house, property? Yes. Where have you earned that? Country B. In DTAA sums, it is always advisable that you also write about the country where you are earning income. House, property income in country B, 23%. The rent that you have earned is 3,30,000 rupees. Any student writing that 3,30,000 in the outer column, Durantam, disaster, because 3,30,000 will be in the inner column. A basic principle of income tax: whenever there is any expense incurred for the purpose of earning income, when you have earned this rental income in country B, with respect to this rental income, you have incurred expense in the form of municipal taxes rupees 10,000, and you will get deduction of your municipal taxes. So any student writing 330 in the outer column, disaster, you take deduction, and the amount that you will write in your outer column 3 lakh, again disaster. Any student who has written this 3 lakh 20 also in the outer column is a gone case, because this is income from house property, and therefore assessee is going to be eligible for standard deduction at a rate of rupees 30%. Standard deduction of house property is available on this amount, which is called net annual value. 3,20,000 into 30%, 96,000 will be your deduction, and only rupees 2,24,000, only rupees 2,24,000 shall enter your outer column, and this is what you have to focus on. Any student not giving municipal tax deduction? Wrong answer. Any student not giving standard deduction? Wrong answer. The number of places of going wrong are very, very high. I often say this in class to my students: studying direct tax is like getting married. Every time you think you are right, you are wrong. She will find out some mistake. She who? ICAI. Studying direct tax is like getting married. So you have to be very, very careful about the possibilities or the places where you can go wrong. At this stage of the question, I wish to remind you, we are doing double taxation relief, but we have not used it till now. At this stage, I also wish to tell you this, that please observe 2-minute silence for my unhealthy competitors, according to him or according to whom I teach house property in CA final, and therefore I waste the time of my students. You should not teach house property to CA final students. It is an open challenge to those people and their blind followers. Try solving this sum on double taxation relief without knowledge of income from house property. This culture of fast track crash courses is killing education in our country. In direct tax, you learn everything or nothing. Everything or nothing. If you don't know everything, you don't know anything. That is what direct tax is all about. That is what direct tax is all about. You cannot solve a sum on DTAA if you don't have knowledge of house property. Live example proof in front of you. And therefore, first of all, I don't take any face-to-face crash course at all. I never take crash courses. My face-to-face lectures wherever I teach are only 100% full-fledged portion coverage. I am against the concept of crash courses. Having said that, why do I record crash course videos? Why do I record crash course videos? Because after results, before the next exam, very little time is left for those students who have cleared the first group and want to study DT now, and also for those students who took somebody else's class and were highly dissatisfied, and they have very little time left with them, and which is why crash courses on video form. Initially, I always gave only full courses. I was strongly against the concept and culture of crash courses. Even today, I am against the concept and culture of crash courses. But some students approach me by saying that if you are not providing, then we have to buy from other people with whom we are not comfortable at all, and we don't have time to learn full course. So please help us only for the benefit of those students. And in every crash course lecture, I always say this: dear student, you are learning a crash course. Crash course means disaster in your career. I am against this concept, but you want to learn? Okay, I will start my lecture. I say this in my crash courses, in my videos, because I don't take face-to-face crash courses. Having said all of this, remember, you have to know house property to solve this question. And by the way, till now, we haven't used any knowledge of double taxation relief. Let's continue. So don't forget the system. One by one, check for heads of income. There was no salary. We have house property, we have mentioned. Next head of income is going to be profits and gains of business or profession. Can I say you have income from profession in Mumbai? And for those of you all who don't know, only for your knowledge, I am telling you Mumbai is in India. Just in case you did not know, let me tell you, Mumbai is in India. Income from business in Mumbai, rupees 9,20,000. Income from business in Mumbai, profession in Mumbai, 9,20,000. I have directly written this income from business in Mumbai, profession in Mumbai, 9,20,000 in the outer column. Some intelligent students ask me a doubt in class here itself. They say, sir, why don't you write this in the inner column? Because the assessee does not have just one business. Assessee has got some more businesses and you should add them and write the total in the outer column. Assessee has got income from agriculture business in country A, 72,000. You should write that 72,000 over here, is what some students tell me. Don't laugh at those students. They are absolutely right. Those students who are laughing at this, let me tell you, you are wrong. I wish to now give you some more knowledge. Don't write this anywhere. I will dictate it for you. Don't write this anywhere. Please don't write this. Section 10 subsection 1. Section 10 subsection 1. Or actually section 10, they are unrelated, so you can call it clause. The provision of income tax which has made your agriculture income exempt. What does this section say? Listen to me carefully. Rent or revenue. Rent or revenue from land in India used for agricultural purposes. Rent or revenue from land in India used for agricultural purposes is going to be exempt. That is section 10 subsection 1. Rent or revenue from land in India used for agricultural purposes will be exempt. In other words, agriculture income is exempt under section 10 only if it is earned in India, and in other words, agriculture income outside India will be taxable. Don't write anything, I will dictate you everything. First understand please, agriculture income earned outside India will be taxable. Are we clear? So those students who said that please write, let me tell you, they are correct. Will agriculture income come in our computation of total income? Yes, it will come in our computation of total income. Yes, it will come. So those students are right. Then you are thinking, then write. No, why are you not writing? Write over here, no, agriculture income. Why aren't you writing? Because I wish to give you some more information and I will make you write everything together. Agriculture income in India is exempt. I right now told you. Agriculture income will be taxable only if it is earned outside India. Only if it is earned outside India. Now use your brain. In Malayalam, thalla chor. Use your common sense. Samanya bodham. Please understand that if it is income outside India, it can be taxable only for residents. A non-resident cannot be paying tax on foreign income. Supposingly Barack Obama has retired and he starts farming in America. Is he non-resident? Yes. Agriculture income outside India. You think that will be taxable in India? Barack Obama is a nice human being. He may just pay tax. If it is Trump, he will explode some bombs in India. Are you understanding? Globally, there are two principles of levy of tax: residence and source. Non-resident can pay tax only on source, and Indian agriculture income is exempt. Foreign income can be taxable only for residents. Effectively, first thing, agriculture in India exempt for everybody, resident or non-resident. Second thing, outside India will be taxable only for resident. Is Vikas a resident? Yes. So will agriculture income come in computation? Yes. Will it be taxable? Yes. Then why are you not writing it? Because the last thing that I wish to tell you is that whenever agriculture income is earned outside India, taxable only for resident. Where does a resident stay normally? In India. If the income is earned outside India, that means it cannot be his main source of income, which is why it has been provided that agriculture income outside India will be taxable for residents, but under income from other sources, agriculture income will come in the computation, but not in PGBP, in IFOS. So this is what we have studied. In India, exempt for everybody. Outside India will be taxable only for residents under income from other sources. All this I will make you write by way of a note. This note you will not write in this solution, not in this answer, because this is not a note that I am making you write for this question. This is a general note on income tax. So in the first page of your notebook or last page of your notebook, you just make a list of points to be noted, and somewhere on the first or last page, so that you can revise it regularly, you write this. First page you must have written the name of yourself and your God. Rest of the page you can use. Last page please avoid, because I have generally seen that people, or the last page of their notebook, they either use it for playing some games or scribbling, or sometimes they tear it. If they want to cut their nails, they use that to cut their nails. So avoid last page, but wherever you write it, please maintain this. Please write that note. I will not go by the correct grammar. I will quickly dictate only the note. Write down please. Agriculture income exempt only if earned in India. Agriculture income exempt only if earned in India. Outside India, full stop and continue. Outside India taxable only for residents. Outside India taxable only for residents. Under IFOS. Under IFOS. Agriculture income exempt only if in India. Outside India taxable only for residents under IFOS. So whatever I have discussed, I have made you write everything. So that way, now finally the question is, will agriculture income come in the computation? Yes. Will it come here? No, it will go under IFOS. So we have finished salary, house property, business profession. Bad news, till now we have not used DTAA chapter. Next head of income, capital gains. Not there in the question, ignore. And lastly, you have income from other sources. When it comes to income from other sources, what exactly is going to be your duty? Start reading the question again. From the top to the bottom, read every line. Any income which is already considered, excellent. Any income which is not considered, this is your last chance. So read everything, just in case you have missed any other head. Just in case. So reading again will stop you from making that mistake also. So let's just go and check one by one if we are left with any income. Income from business in Mumbai. Have we taken it in PGBP? Yes. Interest on saving account. We have not taken it. So let's then take interest on saving account under IFOS. And it has been given in the question that this is income earned in India. Rupees 64,000. So this is what we will do. Check every income. Anything that has not come till now, take it. Next, agriculture income in country A. With all the discussion, do we now know that agriculture income in country A, where tax rate is 12%, is going to be taxable in India because assessee is resident under IFOS, rupees 72,000. Tell me yes or no. Royalty income gross rupees 8 lakh and expenses for royalty rupees 70,000. And listen to me very, very carefully. Your royalty income will also come under income from other sources. Again, it is country A, so 12%, but not entire amount. Whenever there is any expense incurred for earning income, basic principle of income tax, that you will be getting deduction of that expense and you will pay tax only on 7,30,000 rupees. net income after taking deduction of expense. Royalty is basically something that you earn on your intangible assets. Whenever you are the owner of an intangible asset, intellectual property like copyright, trademark, patent, and you give it to someone for usage, you will earn royalty. So the logic of putting it in other sources is that assessee is not regularly involved. You make the asset, you make the book and give it. The seller will sell, you just earn your royalty. I make video lectures once and give it to our portal. They sell it. Our portal, Coppergate, will sell it. I have to just sit home and enjoy the NEFT that I get. All thanks to you people. So basically, you are not actively involved in the work and consequently royalty will go in income from other sources. Let's continue. Dividend income in country B where tax rate is 23%. Will we take dividend income? Exempt, no? Disaster. Durantam. DDT is paid only by domestic companies. No problem. I give you the benefit of doubt. When I will teach you DDT, I will definitely teach you this. In India, DDT is payable only by domestic companies. That means foreign company will not pay DDT. And the whole idea behind exemption from DDT was on the understanding that company pays DDT, shareholder exemption. The whole idea behind the exemption was that company has already paid tax. If the company has not paid DDT, the dividend will be taxable for the shareholder, and that also entire amount will be taxable. Every rupee will be taxable. Entire dividend 2,25,000 will be taxable. From country B 23% because that company has not paid DDT. And rental income we have already considered. Effectively, all the incomes given in the question get over here. And finally, what is going to be our income from other sources total? Let's see what the total is. 10,91,000. And if I ask you the gross total income, then what is our gross total income? 1091 plus 9,20,000 plus 2,24,000, that is total income of 22,35,000. Why are we calling this income our gross total income? Because in the DTAA chapter, while doing unilateral relief, I have taught people that assessee having income from royalty will be eligible for a deduction under 80 QQB maximum of rupees 3 lakh. So here the income is 730, which is more than 3 lakh. Therefore, assessee will be eligible for chapter 6A deduction 80 QQB rupees 3 lakh. Any student who deducts this 3 lakh and shows 19,35,000 as the taxable income, that is the beginning of your end. That is disaster, because this is not just the only deduction. You have one more deduction, and only after you take that deduction you will get your net taxable total income. And that deduction is, listen, any student who does not know 80 QQB while doing double taxation avoidance agreement, you get the benefit of doubt, because you can know that section only after you have studied chapter 6A, which is precisely the reason why I teach those chapters also in CA Final. But if you are a CA Final student and you are doing articleship and you are getting interest in your account, bank account, where your stipend is getting accumulated, nominal amount, ridiculous amount, but you have interest, then you do not get the benefit of doubt of knowing that, of not knowing that against saving account interest we have been given chapter 6A deduction in income tax. You may have worked in audit, irrelevant. You may have not gone to office at all. I am sure there are some of you all who don't go to office. You don't go to office to learn. You don't go to a class to learn. You learn from video lectures. Fantastic. So for your knowledge, even you people are required to first take a check and then return the cash to show that you are doing articleship. Correct, no? You are doing that, I know. You. I know you are doing that. You do that, no? Then listen. You do not get the benefit of doubt of not knowing about saving account interest. If you did not know about royalty deduction, it's okay, because after I teach you, then only you can know. But I am sorry, I can't give you benefit of doubt of not knowing about this deduction, and you will please understand, if you forget this deduction today, can I say your deduction amount will be wrong, your net income will be wrong, your basic tax will be wrong, your cess will be wrong, your average rate of tax, everything is wrong only, no? Everything is wrong. What great thing you have done in life? What great thing? Then you say that I don't get marks. If you do wrong, you cannot get marks. To get marks, you need to do things correctly. And therefore, I always say studying direct tax is like getting married. You are going to be getting deduction. You are aware of a section 80 TTA. You get maximum 10,000. But there is also another section 80 TTB where the deduction will be 50,000 rupees. Please listen to the following things. Please listen. First of all, both TTA and TTB are deductions, not exemptions. So the entire income will come in your gross total income and it will become deductions after GTI. It is a deduction. The maximum limit of TTA is 10,000 rupees and the maximum limit of TTB is 50,000 rupees. So if it was TTA, it would have been 10,000. If it is TTB, it is 50,000. And also understand, it is maximum. Today if this interest was only say 4,000, then you will not get 50, maximum 4. So it will be actual or 10,000, whichever is lower for 80 TTA, and actual or 50,000, whichever is lower for 80 TTB. Are you following what is happening? And in both cases, it won't be exemption. So it won't be subtracted here. It will be subtracted at the bottom. At the bottom. Have all of us understood this? 100%. But your doubt is, when does TTA apply? When does TTB apply? I will tell you that. Give me a minute, please. I will tell you that. Can I say total deductions? If I tell you that 80 TTB is applicable, can I say total deduction will be 3,50,000? And the net taxable total income is going to be 18 lakh 85,000. And now I am asking you to calculate tax on 18 lakh 85,000. Don't forget, the main question is calculate total income and tax liability. And also, what if I tell you, till now we have not used a single word of the knowledge acquired while doing double taxation relief chapter. Till now we have not used anything. Tax on 1885. Can I say 885 will be 30%? Basic tax. 8 lakh 85 into 30%, the excess over 10 lakh plus up to 10 lakh 1 lakh 12,500. Wait, if you do this is yet another case of Durantam, disaster, because look carefully, Mr. Vikas, Modi ji's favorite word, Mr. Vikas is of age 60 years, and that means Mr. Vikas is a senior citizen, and that means basic exemption, and resident, obviously basic exemption will be 3 lakh, and that means up to 10 lakh the tax is going to be 1 lakh 10,000. This is what I wanted you to be alert about. And wait, now I'll finish this matter first. 80 TTA and 80 TTB. Some of us are aware that this is maximum 10,000, this is maximum 50,000, and both cases it is deduction. So first it will enter your income, then it will become deduction. Maximum 10, maximum 50, we are probably aware. But what after this? Please understand. This is available to people who are 60 years and above, senior citizen. This will be available to others. But this will be available only if the senior citizen is resident, and therefore other people will go here. 80 TTB is only 1 year old. It came actually in AY 1920. It came last year. 80 TTB. Only 1 year old provision. And when TTB came, it was a new section. There was an amendment in TTA also. There was an amendment in TTA also. Listen to the amendment. Some of you all are thinking, what? We didn't know. There was an amendment. In TTA, they said TTA will exclude these people. So that means any person who is covered in TTB will not get TTA. Otherwise, what these smart people will do, they will take this 50 and this 10 both. We don't want to give you 10. So anybody who is taking this 50 will not get 80 TTA. So who will take 50? Resident senior citizen. Other people will go where? In maximum of rupees 10,000. So what is deduction under 80 TTA? Maximum 10,000. What is deduction under 80 TTB? Maximum 50,000. This is also maybe something which some of you all are aware. But as much as I know ICAI, they will target exactly that part of your brain where you have gone for selective study, where you have gone for not studying in detail, because there is one hidden condition which many people are not aware. TTA is going to be available only on saving account, but TTB is available on time deposits as well. That is, TTB will be available on FDRD also. Obviously, current accounts, there is no interest. TTB, senior citizen, will get 50,000 deduction against their FDRD interest also, and which is why the TDS limit under 194A for senior citizens has been increased from 10,000 to 50,000, because TDS covers only FDRD, saving account is not covered. So that is increased to 50,000 rupees. TTB will cover all of them. See, in this question, it was saving account only. It was saving account. But if this was FD, no, still answer will be same. And 50 only. But if it is a non-senior citizen, then only on saving account, that also 80 TTA, that also maximum 10,000. FDRD you will not get. Non-resident senior citizen will not get the benefit of TTB. Are we clear about this? So basic tax, just to check your level of alertness, whether you have paid attention to the age of Mr. Vikas. You can't expect the question to tell you all this. Question has given you the age, everything else you have to do accordingly. Can I say 8,85,000 into 0.3 plus 1,10,000 will give you basic tax of 3,75,500 rupees. There will be no rebate because this is more than 5 lakh. Now, like an idiot, don't give rebate because this is less than 5 lakh. No, please. You have to see the amount of income. No surcharge because this is less than 50 lakh. That means, can I say once again, we will only add 4% HEC and we will get our total tax liability. Total tax liability after adding HEC is going to be 3,90,520. And what if I now tell you, till now we have seen house property, we have seen exempt income, agriculture income, other sources, we have seen chapter 6A deduction, we saw the basic exemption of senior citizen, we saw TTA, TTB, but we are doing a chapter called double taxation relief and we have not used any knowledge of double taxation relief. This is how CA final comes in front of us. If you learn everything, then only you are doing justice to your career. It is everything or nothing. It is time that, my dear students, realize that obviously I don't care about the world, but those of you who have trusted me with your career, those of you who have been my students, I am sure will trust me and take my advice. Please learn everything in detail. Do not take any chance, please. So total tax liability 395.20. Finally the time comes to use your knowledge of DTAA against this. Because the assessee is resident, can I say we will get relief under section 91, and this we will calculate by making our working note 1, and after that we will get our final tax liability. Obviously, if there was any TDS or advance tax, then that will change my final tax payable, but this is going to be my final tax liability. What is my final tax liability? What is my final tax liability? Only after calculating my relief. Without wasting any time, let us go to calculation of relief under section 91, where the logic is Indian tax or foreign tax, whichever is lower. As far as your average rate of tax in India is concerned, 390, 520 divided by 1885 into 100, your Indian tax liability, your average rate of tax in India is going to be, can I say, 20.72% average rate of tax in India, and this will be compared with tax rate in foreign countries. We have been given two countries in the question. Tax rate in country A is 12%, tax rate in country B is 23%. Obviously, when we will choose lower rate, we will have to choose country by country. With respect to country A, 12 or 20.72, lower of the two, 12%, and with respect to country B, 23 or 20.72, lower of the two, 20.72%. So 12% in case of country A, 20.72% in case of country B, and then time comes to calculate your relief under section 91, which will be on the incomes country wise. So country A incomes, country B incomes, and we also know the rates because we have chosen the lower of the two rate. In respect of country A, the lower rate is 12%, and in respect of country B, the lower rate is 20.72%. We just have to write the amounts of income, and this question finally will get over. I already told you this is the Gita, Quran, Bible, the holy book of double taxation relief chapter. So in case of country A, I think if you read the question, you will come to know there are two incomes: agriculture income 72,000 and royalty income 8 lakh rupees. So any student giving relief on 72,000 plus 8 lakh, 872, you will not get any relief from CA. You may have to give CA again. You won't get that relief from clearing because this is nonsense. Relief will be available only on that amount of your income which is included in NTTI. When we took 8 lakhs income, against this 8 lakh, we first took deduction of expenses of 70,000, and then we took chapter 6A deduction 80 QQB specifically against this income. Accordingly, the net amount that we have included in NTTI is only 4,30,000 and plus 72 of agriculture. 5,02,000 is the income on which we will be getting relief. Only 5,02,000. Accordingly, the relief will come to rupees 60,240. And when we come to incomes in country B, if you observe carefully, we have dividend income 2,25,000 and we have house property 3,30,000. Once again, any student taking full 3,30,000 in case of relief will again be a disaster, because even if that country you have earned 3,30,000, in India, after taking all the tax benefits, you have paid tax only on 2,24,000, and the amount included in your NTTI for dividend is 225 and for rent it is 224. Any student taking full 330, again it will be a disaster. Accordingly, 4,49,000 will be eligible for relief at 20.72, that is 93,033, and with this your total relief will become 1,53,273. This was only your working note. Your question will get over when you come here and complete this by giving relief of 153,273 from your tax liability of 395.20, and therefore your final tax liability coming to 237,247. Obviously, you can take it to the nearest multiple of 10 and make it 250. This will carry something about 8 marks, and this is the toughest thing that is possible in unilateral relief, and that marks completion of your chapter double taxation relief in complete detail, one of the most important chapters because it is a part of international tax. 30 marks in paper 7 and 100 marks in paper 6. That's the end of your chapter. Thank you very much.